Are you a hardworking dad, juggling family responsibilities while dreaming of building wealth through real estate? Welcome to the Invested Fathers Podcast, where we explore how to balance investing and fatherhood. I'm your host, Kenny Johnson, founder of East West Capital. Over the past 5 years, I've been buying real estate to free up my time and secure my family's future. Now I'm here to help you do the same. Join me as we navigate the real estate world together, building wealth and strengthening our families. As my grandma always said, East West, home's best. In today's episode, we'll be discussing why I passed on a pretty big deal that was in my own backyard. What makes a good deal? As an investor that stays connected in the space, I want to tell you all, there is no shortage of deals out there. I get asked this every now and then. How are you finding your deals? Are there any good deals left? There's a lot of deals. The question is this a good deal for you? So I'll be walking through my criteria of what makes a good deal for me to invest on. I want to start with a story. I received a text message from a good friend of mine a few months ago, and the text said, "Hey, Kenny, I know you do a lot of investing into real estate. I have a guy that's selling off some properties, and he's going to be basically looking to invest somewhere in the $3 million range after he sells off all these businesses, these properties. He wants to invest this and make mailbox money every month." This guy is in that retirement status. I was faced with an opportunity to say, hey, let's move this guy's money into a place that makes really good sense for him. So this is where my mind goes in regard to what makes a good deal for this guy. Number one is I want to find a deal that has an excellent sponsorship team and track record. That is number one for me. The sponsorship team, also known as the general partnership or GP, they're responsible for managing the investment and making key decisions. If the team lacks experience or has a poor track record, you're going to be hesitant to invest. Seeing a history of successful projects and having a deep understanding of the market is something that this team needs to be able to show. The deals that I'm partnering on, I'm not always in charge. I've invested a lot in the single-family home space in South Carolina. But the bigger deals have more investment upside. And typically there's going to be a team that has done these deals many times that I'm going to invest with and can bring capital into the deal. So that's how my business works. The second thing that I think is important in regards to what makes a good deal for me and for you is the alignment of interests. What are the goals of this team? Have they invested any of their own money into the deal? That's something that a lot of people usually ask me. What is their goal for the property? Are they looking to just max out the cash flow? Are they looking to make a huge renovation and would sell it in 3 years, 5 years? The third thing is communication and transparency. This cannot be overstated in my mind because people are going to put their best foot forward in the beginning anyway, when you first meet somebody. If there are any hesitancies, reservations, bad feelings, people don't like each other, there's just a lot that goes into the meshing of a team with me and my investors. I will quickly pass on a deal if I feel not responded to, the person is selfish in their style of communication. That's a red flag for me. Risk management is the next item I have here. Investors will assess how well the sponsorship team manages risks. This includes their strategies for dealing with market fluctuations, tenant issues, unexpected costs, and a team that lacks a solid risk management plan may be viewed as too risky. So that's always a good question to ask is what happens if things get a little more expensive than planned? What happens if occupancy rate drops? Have you ever experienced something where interest rates are going up and you were planning on doing this during this time? Asking those questions and hearing where their head's at is always helpful. There is no crystal ball and there is no guarantee that all this stuff is going to work exactly as planned. So as an investor, you need to expect there being some risks and being okay with mitigated risks before you invest. Next is exit strategy. That's very, very important. I've always been taught have multiple exit strategies, have a plan, but if that plan doesn't work, what's the plan B? So exit strategies would be typically, we're going to hold on to this property for 5 years and then we're going to refinance on it, or we're going to hold on to this property for 3 years and then we're going to do a tax credit sale and we're going to pay back investors this much, or we're going to sell the property at this rate, at this time, and this is how we're coming up with the numbers for that. What's kind of nice about these multifamily commercial properties is you can force the appreciation or force the value of the properties based on the income as compared to selling a single family home in a certain street, you're looking at comps. And those comps show pictures of kitchens and bathrooms. This is a new roof, and here's the outdoor shed, etc. When you're selling a apartment complex, yes, finishes and amenities are good for understanding what you're buying, but bottom line is, what is the net income on this property? What has also been of sale in the nearby market that will affect what's called the cap rate. And there's things I still don't all understand in this world of selling apartments, but commercial versus residential is hugely based on income. I saw a deal recently that it was owned by a mom and pop in Charleston. They've owned it for 30 years and the rates were just really low in regards to each room that they had. They were very happy with the occupancy rate being 99% or 100%. They had made no updates to the property, but they were very happy with the income that they were getting. So they sold it, and the new owners were going to completely renovate the properties and almost double the rent of each room. There's 100 rooms here, and that was going to skyrocket the value of this property based on the income. All right, so the final thing is market and economic conditions. So external factors such as market saturation, economic downturns, or changes in interest rates can also influence an investor's decision. Even with a strong sponsorship team, unfavorable market conditions can make a deal less attractive. So understanding who are the big players nearby. A lot of deals I hear people say, here's Walmart's headquarters is 3 miles down the road, or they just put up a huge plant that's growing in this area, or we got a Walmart and a Starbucks and all these things just down the street. This is a growing area. Getting back to that story with the $3 million guy, I presented to him 3 different deals that, in my opinion, were all really good deals. And he ended up not going forward with any of them because he didn't understand enough about real estate investing in general. He knew his business, but he also wanted to have full control, 100% control over the investment. That almost sends a mixed message to my mind because he wanted passive income, but he also wanted to be in full control of the asset. And that might be someone out here that's also trying to figure out what's the best investment for me. I don't like the idea of someone else controlling this money. Then you basically have to be okay with managing the asset, which you have no experience buying a 100 unit. The one deal that was the best for him was a deal that was actually in my own backyard. Greenville, South Carolina is where I live. And this property was actually a property this guy had been to growing up. This guy was a native from this area and knew this apartment complex. But the reason why I didn't go forward with this deal, number one, this guy's interest was hesitant on just not being 100% owner and doing real estate in that way. And two, the communication level of this specific team was very inconsistent. I felt like every time I talked to them, it was, we care less about your goals. We just need to get this money across the finish line so that we can close. And this is such a great deal. If you're investing in a deal because of the deal itself, be careful. There are so many deals out there that you'll find amazing returns and all sorts of things. All right, everybody, trying to figure out what's a good deal for you. If you're still in that world of analysis paralysis or understanding how do I make a good move with my money, I talked about sponsorship team experience and track record, alignment of interests, communication and transparency, risk management, exit strategy, and finally that market and economic conditions. All those things come into play in regards to moving forward. Thank you for listening to this episode of the Invested Fathers podcast. If you liked this episode, we would love for you to click subscribe and leave us a 5-star review. We appreciate all of your hard work as a father and look forward to our next episode together.